Have you guys seen what's happening with the US dollar? After a lot of strength last year, it's finally softening up, but it's not about what has happened or what is happening. This video, I'm going to tell you about what's going to happen next, which is always added value, so you can position yourself to benefit from all the changes that this is having on all sorts of investments. There's three things that are happening, among others, mainly three things, that the declining dollar is causing for a lot of investments. We're going to go into that today. I'm going to show you some charts, and we're going to figure out what happens next and what you can do about it. Nothing we say in this video is intended as personalized trading advice for you. Here's a chart of the dollar index, the DXY, to show you what's going on with the US dollar. And after a lot of strength, it's finally starting to soften up. And what happens with that is that things that are priced in US dollars seem to be more expensive, such as commodities. The price of oil will seem to be increasing as the dollar strength is declining. Same with gold, same with corn, same with coffee. It also makes it easier for foreign nations to pay back their American dollar debts that have to be paid back in US dollars. And at the same time makes it easier or less expensive for other foreign nations to buy our exports if we have very many left at all. And as the dollar weakens and the exports become less expensive for other people to buy them, that will naturally, organically increase how much other nations are buying from America. And another thing that happens is that multinational companies are going to be seeing higher earnings. If you're one of these multinational companies that sells things to other nations, but you're based in America, those companies, and I'll get into a whole bunch of these companies, I'll tell you exactly which ones they are, they will have greater earnings or better operational results because the things they're selling results in more worth or value coming back this way. Because a weaker dollar will make it seem that all the things they're selling to other nations, to Europe, they're selling stuff to South America, they're selling stuff to Asia, that's going to be more money coming back in this way towards America. Something that was expensive for another nation to purchase will seem to be getting less expensive. It's like going to Mexico and getting a cheaper beer. Irresponsible monetary creation is easier, more expedient for political purposes, but longer term, you're going to see that it would have been better to take short-term pain than immediate gratification, which we do again and again and again. It would have been better to rip it off like a Band-Aid in one motion and deal with this problem. No one's going to do it. I just talk about it because I'm frustrated, but I know no one's going to be able to do anything about it. So what you can do is you can position yourself to benefit from the unfortunate things. The dollar's coming down no matter what. So I'm not cheerleading it. I'm saying this is what's going to happen. So why don't you set yourself up in a way that you benefit from what actually happens? It happens either way. You might as well set yourself up to end up in the best situation as it plays out. And if you see it happening ahead of time, that's where all the value lies. You can make your moves before other people have caught on to the trend that's happening. Some of these companies, the multinational corporations that stand to benefit, he mentions Hewlett-Packard, IBM, Microsoft, Johnson & Johnson, 3M. And I'll show you some of these charts, and I'll flip the US dollar chart, and you can see that you can overlay them, and they kind of have a similar feel. When the dollar is going down, these companies tend to do better. Same with commodities. I'll show you gold compared to the actual dollar index activity. There is a correlation. At very least, you can't say there's absolutely no correlation there. There is a generalized correlation towards a weaker dollar being better for multinational corporations, commodities of all types, and worse for people who use the actual dollar. That's why you might have bought your house for $300,000 and then it's worth $400,000 and you think you did so well. But over that time, how much deterioration was there in the dollar? It just took so many more dollars to buy the same property. That's because the dollar itself is not the same thing as it was a couple of years ago, a couple of decades ago. The dollar is actually less valuable, even though nothing happened to it. It just sat there on your desk. You never touched it. You didn't do anything. And it lost value like it was melting ice. But don't worry. This will all stop in terms of the deterioration of the US dollar. As soon as they stop printing new money to get out of tough fiscal spots. So when they do that, you won't have to worry about it anymore. But you and I both know that that is not going to ever happen. This is an article from CNBC Pro, and it's about how the multinational companies benefit from the declining dollar. How the dollar's sharp reversal could be an unexpected positive for these companies. While everyone's waiting for a downturn in earnings, there's one bright spot that could help cushion profits and revenues of tech and other multinational corporations. Bernstein technology analyst Tony Sacconaghi says some impact of the weakening dollar could start to show up as soon as the fourth quarter earnings season, the results of which will usually come out in April if their fiscal year ends on December 31st. And that's when companies like Apple and IBM report. But Chandler says that an even bigger impact on earnings could show up in the Q1 results. The dollar index is down 11% since the peak in September. The euro, which fell below parity with the greenback, is now up 11% in that time. It's back to 109 per dollar, meaning that euro is slightly more valuable than the dollar. Meanwhile, against the Japanese yen, the dollar is now 14% lower since the top. You may remember in recent history about how strongly the dollar is performing. Brent Johnson's milkshake theory played out almost exactly like he thought it would. And now you're starting to see that trend fully process through and go through. Now we're looking under the hood and we're seeing, okay, what is this dollar worth? What is the value of the US dollar? And what are the things that affect the value of the dollar? One of them is absolute insane monetary creation. All that does is water down the dollar. Yeah, we can pay our debts by printing new money. There's all sorts of problems with that, and that's just an extension of the problems that we're building worse and worse and worse over the last numerous decades. Everybody's talking about the same thing. The real debate is how much the dollar falls, not the direction. A weaker dollar is now taken for granted, said Chandler. Fair enough. And one of the big ways that it has an effect is it'll seem like things like commodities are increasing in price nominally. Look at gold. Gold is really ramping up. And if you flip this chart against the strength of the dollar, and you can see that this is seeming to make the price of gold increase. There's a lot of other demand trends as well, but the gold prices will go up as the dollar falls. And one of the things I expected for a while, I figured that gold would break through $2,000 an ounce and never look back. And I've thought this for a long time now, and it still hasn't happened. But the price of gold continues to ramp higher as the US dollar declines. I'll show you Newmont mining chart, and you can see here how the prices were rising on anemic volume. And what does that tell you? What do you think that tells you? It tells you that there are no sellers. The sellers have dried up. So a little bit of buying is putting upward pressure on the prices of the shares of Newmont Mining. Here's a chart of Kinross. Here's a chart of Yamana Gold. These are gold mining companies benefiting, as I expected they would, by a declining dollar, which I've been expecting for a long time. This is going to result in gold itself being back on vogue, so to speak. You're going to see more media coverage. People will start taking notice of it again after a decade or two of just forgetting about what gold is and why it has any value, even though it's the only thing that's always had value. So what's next for the US dollar? You're going to see a continuation of falling US dollar strength over time. A lot of this is predicated by all this excessive, irresponsible monetary creation that will continually squish down the value of the dollar in comparison to other currencies. Which means you're going to have a lot of continued increases in gold prices, which will trickle down to gold mining companies, which will increase by even more than the increase in the price of gold. And as we talked about, the multinationals are benefiting from a lower dollar, and they'll benefit even more, making them a better investment longer term if the dollar continues to fall. All other things being equal. Get positioned and expect for the US dollar to do what I've expected for a long time. It will continue to decrease in value, in my opinion.
Well, I can tell you for me, it was about taking a small amount of money and using it to work for me, to make more money. And I think that a lot of people who find their way to me are in the same boat. Maybe they have a few $100s, maybe they have $0, and then want to say, how can I get a leg up? One of the ways to do it is to get invested in the right kinds of small companies just when they're getting started and have all their growth ahead of them.
And thanks for being here. We love you guys. We really want to help you out, and we're doing our best all the time. So please help support us, and we'll keep you guys on the right side of everything.